Just a few days ago, the world couldn't get enough of gold, silver, and copper. Charts were exploding. Social media was screaming new highs incoming. People were piling in like the train was leaving the station forever. But then, almost overnight, the entire market flipped. Gold collapsed. Silver got obliterated. Copper rolled over. And suddenly, everyone, and I mean everyone, was running for the exits. What happened? Why did the crowd go from fear of missing out to fear of staying in? Let me break it down. The spark that lit the fire. Everything started with one shock. A sudden shift in expectations for the next U.S. Federal Reserve chair. Markets believed a more hawkish, more anti-inflation, more tight money leader was coming. And when interest rates are expected to stay higher for longer, gold and silver, which pay no interest, suddenly look less attractive. That was the spark. Margin calls. Then came the gasoline. The CME, the world's biggest metals exchange, raised margin requirements again and again and again. If you were trading gold or silver with borrowed money, you got a message saying, deposit more cash or we close your position. Most traders didn't have the cash, so they were forced to sell. And when forced selling begins, it spreads like wildfire. The crowd panic. Now imagine a crowded nightclub. Everyone is dancing. Everyone is happy. Everyone thinks the party will never end. Suddenly someone yells, "Fire!" People panic. They rush to the exit. They push each other. Some fall. Some get trampled. Nobody is thinking logically. They just want out. That's exactly what happened in the metals market. Gold wasn't sold because it became bad. Silver didn't crash because it lost value overnight. Copper didn't fall because the world stopped needing it. They fell because fear took over. When fear hits, people don't want assets. They want cash. Cash feels safe. Cash feels clean. Cash feels like control. And so the mobs sold everything, even the things they loved just days earlier. The bigger picture. This wasn't the end of gold. This wasn't the end of silver. This wasn't the end of copper. This was a positioning purge. A leverage flush. A sentiment reset. Markets do this. They overshoot on the way up. And they overshoot on the way down. Rising bond yields. It started quietly, with bond yields rising around the world. But the real shock came from Japan. Japan's government bond yields jumped, something that almost never happens. And when Japanese yields rise, global money shifts. Think of it like this. If a super safe Japanese bond suddenly pays more interest, big investors say, why hold gold or silver when I can earn more safely? So they sell metals. And that selling pressure starts the slide. The US dollar wakes up. Then the US dollar, the giant of global finance, started rising. A stronger dollar usually means weaker gold and silver, because metals are priced in USD. It's like lifting the floor under the dollar and watching gold and silver sink in comparison. This added more pressure, more selling, more fear, tension in the Middle East. As if that wasn't enough, geopolitical tension in the Middle East spiked again. Normally, that pushes gold up, because gold is a safe haven. But this time, something strange happened. Investors didn't run to gold. They ran to cash. Why? Because when fear becomes global, people want the simplest, safest thing. Money in the bank. So instead of buying gold, they sold it. The profit-taking avalanche. Remember, gold and silver had gone parabolic. Gold up nearly 30% in a month. Silver up more than 60% in weeks. When prices rise that fast, traders get greedy. They borrow money. They use leverage. They chase momentum. The first cracks appear. Those same traders rush to lock in profits. Profit-taking becomes panic selling. Panic selling becomes forced selling. Forced selling becomes a market avalanche. The truth behind the chaos. This meltdown wasn't about fundamentals. It wasn't about gold losing its value. It wasn't about silver losing its purpose. It wasn't about copper losing its demand. It was a positioning flush, a leverage purge, a sentiment reset. Markets overshoot on the way up and overshoot on the way down. But the long-term story? Central banks are still buying gold. Silver is still in structural deficit. Copper is still essential for electrification and AI infrastructure. The story isn't over. This was just a violent chapter. What should you do now? As someone who studies gold, silver, copper, stocks, bonds, crypto, and macroeconomics every day, here's the truth. In moments like this, the worst decisions come from panic. The best decisions come from understanding. Ask yourself, did the long-term fundamentals change? Or did the emotion change? Because if the fundamentals are still strong, then volatility isn't a threat, it's an opportunity. But remember, this is not financial advice. Everyone's situation is different. Your goals, your risk tolerance, your time horizon, they matter. My job is to help you understand the why, so you can make decisions from clarity, not fear.